Good evening and welcome to Capital Connection, where we join the dots to give you the big picture for business in Africa. I am Fifi Peters. On the agenda today, our panel discusses the curse of mineral wealth in Africa and the skewed economies that it creates of super wealthy elites and also poverty-stricken populations. And a report has found that South Africa is in its longest downward business cycle for 80 years. While in Youth Africa, I will catch up with the Youth Connect Africa Summit that is currently underway in Kigali. But first, Nhlanhla Nene resigned his post as South Africa's finance minister yesterday in the wake of revelations at the State Capture Commission of his previously undisclosed meetings with the Gupta family, seen as the architects of state capture. The commission is ongoing, and Nene's fall from grace is not expected to be the last from the ranks of senior government officials. Former South African Reserve Bank Governor Tito Mboweni was quickly sworn in as the new finance minister. Now, a report by the Institute of Race Relations Center for Risk Analysis says that South Africa is experiencing its longest downward business cycle since 1945. The start of this downward cycle was pinpointed to December 2013, and it has yet to end. I am now joined by the Institute for Race Relations Chief Economist, Cruickshanks. Ian, thanks so much for your time.
Good to be with you, thank you.
2013, take us back to exactly what happened then that business just lost all confidence in South Africa.
Politics obviously had a lot to do with it. The loss of confidence, the fact that capital inflows started drying up and have now reversed. There's more capital being taken out than capital coming in. So it was a long process, and as confidence was lost in the government, in the governors, in government, and the fact that we were spending more than we were earning, that's a recipe for a disaster. We were being much more highly taxed, and there was no new investment. There was no job creation, which we so desperately need. And that started then, and the cycle has exacerbated. It's got worse as time has gone by.
All right, so fast forward to 2018 now. Yes. Politics still a major theme, but we've got a new dispensation. So is President Ramaphosa and now newly appointed new finance minister Tito Mboweni the guys that could possibly see the reverse of this downward cycle in business confidence?
Yes, but remember, this downward cycle has been going for 58 months. That's nearly 5 years. And that's a long time. You don't turn that around in a matter of days or months. Possibly it takes half as long as the downward cycle. It's like turning around a big oil tanker. Sure. You've got to slow it down first, then steady it, and then turn around. That's a major operation. It's going to take quite a while. In the meantime, there's not enough confidence to build the capital structure, the infrastructure of the economy on which we can develop a new dispensation. That will take time.
But then if not the appointment of this new dispensation being a possible trigger to turn this confidence around, then what?
No, it is. It's a positive point.
Sure.
It's a question of negatives and positives.
All right.
It's like the Reserve Bank has got this indicator called the leading indicator, and that's a balance of factors which are leading us to a better outlook or to a lesser outlook. Now, we're having less of the negatives and a start with building up with the positives. But this side hasn't got to that level yet, so that will take a while. But the signs are good, the indications are good, and I think the first big test is going to be the medium-term budget policy statement. If we come out then and we're then seen to be living within our means or attempting to slow down the overspending, that will change that confidence. Maybe after that we'll find a few more roads being built, the potholes in your road being filled, or factories being built, new machineries being installed.
Sure.
That takes time. These are big decisions and expensive ones.
What about the stimulus plan that President Ramaphosa recently announced? Ratings agencies say that it didn't necessarily change their outlook on South Africa. Do you think it's the juice that we possibly need to get the engine of the South African economy going again?
It's a factor. Now we've got there's got to be a number of these factors. They've all got to be going the same way. At the moment, all we've got is the brakes on the negative ones, and the brakes are off on the positive ones. But that balance hasn't been overwhelming yet. I think it will come, but there's a lot of refining to do, I think. And just look at the international ratings agencies. South Africa's rating as an investment destination is still pretty low. We've got one positive point against all the other negative points.
And of course we do have an important ratings announcement due just this weekend, but we'll have to leave it there for now. Moody's set to give its assessment on South Africa's economy this Friday. It is currently the only ratings agency to still regard us as investment grade. Will that remain? Well, we will wait and see. Now, the second edition of the Youth Connect Summit is currently underway in Kigali under the banner of Connecting Youth for Continental Transformation. Its goals include creating 10 million sustainable jobs in emerging industries across the continent by 2020. Joining me from Kigali is Natalie Nyonzima, who is the Managing Director of Ingomoko. Natalie, welcome. Thanks so much for your time. Now, this is the second year that Rwanda hosts the Youth Connect Summit conference. How was the first one? What was achieved there?
Thank you. It is indeed the second year that Rwanda is hosting the Youth Connect Africa Summit. And really, just to name the top 3 goals, is really create 10 million jobs for youth, empower 25 million youth with the skills, and really closing the gender gap. And this is the reality. I think yesterday the Minister of Youth mentioned it in her remarks that for this year's Youth Connect, we've had about 40% of delegates being women. And it's not only visible in the summit, we also see it in the entrepreneurs that we currently work with at Ingomoko. So it's still work in progress. Creating that many jobs will take a while, but there's actually a lot of initiative going on either in Rwanda or in other parts of Africa. So something that's very unique is that 5 more African countries have also launched Youth Connect. And this is a testimony that more and more African countries share objective for their youth.
Yeah, so it's spreading, it's gaining in popularity, which is not a surprise because, young people, the unemployment rate on the continent is too high. But Natalie, we have made headway by way of increasing gender equality, but you mentioned the number of jobs, that 10 million job opportunities for young people. 2020 is just around the corner. Are we on track to meet that goal?
I am very optimistic. We still have a long way to go, but if maybe I could speak for Rwanda, where we operate from, there are a lot of initiatives going on. I may mention about NIRDA, which is a government institution that is helping SMEs actually increase their export potential by providing them with technology and providing them with equipment. I can mention about the Workforce Development Authority, WDA, really providing employable skills for the young people. I can talk about a big initiative that is actually founded by the MasterCard Foundation, but in really close partnership with the government of Rwanda, by investing like $50 million to equip 30,000 youth in the tourism and hospitality industry to find jobs. So there are a lot of initiatives, and I am very optimistic in the future.
Sure, and Natalie, you mentioned that the summit has now spread to 5 other countries. Are you able to tell us who or which those countries are?
The 5 other countries that have adopted the Youth Connect, I can mention of Liberia, DRC, Congo-Brazzaville, Zambia, and Uganda.
And you'd also mentioned technology, and so it's like a double-edged sword here, because for some, technology will be the thing that creates more opportunities for jobs, with new jobs that currently don't exist now. But at the same time, technology is also the factor that will be killing a lot of jobs. How do you think what role do you think technology will play in at least helping the 10 million sustainable jobs being created by 2020?
Yes. This is a very exciting area, I think, for African youth. And this is the time where they have actually access to, and thanks to the technology, they have access to a lot of information, a lot of tools. And really, technology, how we see it, is that it unlocks or open markets. I'll give an example of this application that was actually launched during the Youth Connect, which is something that is very similar to the LinkedIn that we know of, and is going to, for instance, allow young African professionals get access to professional internship opportunities and employment.
Unfortunately, we're going to have to leave it there for now. Thanks to Natalie there for joining us from Kigali. Now, after the break, my colleague Chris Bishop interrogates the affliction known as the resource curse, or a paradox of plenty that tends to stalk countries endowed with mineral wealth. That's coming up. Welcome back. Now, Mauritius and the Seychelles possess no mineral wealth, but are rated by the UN as Africa's top 2 countries for the development of their populations. Countries that are endowed with vast mineral resources, such as Nigeria and Angola, on the other hand, score very poorly when the same human development criteria is used. My colleague Chris Bishop hosted a recent discussion on the resource curse. That's coming up next.
Good evening, I'm Chris Bishop. Now, joining me to discuss how resource-rich African countries can avoid the paradox of plenty, otherwise known as the Dutch disease or resource curse, to better manage their resources to ensure a country's riches benefit the many rather than the few, is in Kigali, independent financial analyst Isaac Nkusi, and in Lagos we have the CEO of the CFG Advisory firm, Tilewa Adebajo. Welcome, gentlemen. Well, to start off with you, Tilewa, live in Lagos, Nigeria is often used as a prime example, your hometown, of a case of the resource curse. How much has your country suffered at the hands of this?
Thank you very much, Chris. Quite significantly, unfortunately. Nigeria is one of the largest oil-producing nations in the world, 6th largest oil-producing nation in the world. Unfortunately, oil contributes only 15% of our GDP, but contributes about 85% of our revenues. And all efforts over the years to diversify our economy has proved quite abortive, and most of our revenues are still oil dependent, despite the fact that it only contributes 15% of our GDP. Those are the current realities successive governments have faced, and obviously the current government is also trying to intensify efforts to diversify the economy to be able to get more revenues from other sources than oil. So it leads to some dependency that gives you a false hope in terms of trying to invest more in infrastructure, hoping that your oil revenues can pay for it. And once we see the drop in oil prices, the effects of this are quite apparent.
If I could go across the other side of the continent now and live to Kigali, and Isaac Nkusi, an independent financial analyst, where would you say in East Africa would be a country where you see an example of the so-called resource curse?
Chris, I think we do see this resource curse in most natural resource-rich African nations. We, of course, will have Uganda, who's just recently and a few years ago identified oil reserves as well, and some of the political strife associated with that. Of course, you have Kenya and Tanzania, which are also natural resource rich. And again, just to touch on from a behavioral point of view, some of these issues that we're suffering are politically inclined, and of course, as a result of a lot of interest groups in the region as well. So I think that just like my compatriot over in Nigeria mentioned, heavy reliance on these natural resources to provide the nation's necessary funds to invest in infrastructure and systems just doesn't carry through.
If I could just go back to Lagos there and Mr. Adebajo, one of the things that the politicians often say on this continent is Africa is rich in resources, but its people are poor. How many times have we heard that? How can this continent change that and make both the resources and the people rich?
Well, I think we don't need to look very far to find that example. I'll take two countries, for instance, Norway and Abu Dhabi. Both countries have created very successful sovereign wealth funds. Norway has the largest sovereign wealth fund in the world, which is $1 trillion. And what they have done is that with this oil wealth, they have invested in this fund and diversified into other investments globally. The Norwegians have weaned themselves off oil. And as a matter of fact, they are now telling their sovereign wealth fund to divest from oil company stocks and to begin to focus more on renewable energy stocks. We can see the examples also in Abu Dhabi with and what's happened in Dubai. So I think the whole model of diversification, I think there are clear examples globally for us to see. In Nigeria, for instance, we've also started a sovereign wealth fund, but we've only been able to put $3 billion into that fund. So it's very important that we have all these resources, but unfortunately, we are not putting them into the right infrastructure that could develop the potential of the economies of these countries, not only in Nigeria, but other resource-rich African countries. Another challenge we have with our resources is that we're not adding value to our resources. Most of what we're doing with our resources is we're exporting our resources not only to the Western and Eastern countries, but what makes it worse is that the level of intra-Africa trade is also very low. So we're not seeing the value added, and the continent and their people are not benefiting from those resources the way we need to. Nigeria is the largest economy in Africa, but unfortunately, because the economy has not been growing at the rate of its population of 3%, it has now become the global poverty capital, which is a shame. A country that has one of the sixth largest oil producing nation in the world is also a global poverty capital. So that's the irony of Africa.
Well, go back to Kigali in East Africa. That's what's going on in West Africa. How is East Africa battling against this idea of resources may be fine, but they don't help the people?
Well, I think a collective direction, I 100% agree with what's just been said, is to move away from simply relying on some of these natural resources and start focusing on systems and on governance, on the political systems that we have, and in investing in those. Here in Rwanda, we're not known for being particularly mineral or natural resource wealthy, but the investment here has been heavily in human resource, in the youth, in governing systems as well, so that the revenues that the country collects in taxation and in exports can be spread out to build up systems in the country, from infrastructure to sound governance. So I think that that needs to be the direction. Otherwise, even if we do manage to build up sovereign wealth funds here that are heavily reliant upon natural resource revenues, at some point very soon, like other countries have experienced, these dips in prices and alterations in the market can have a very significant effect on a country or a region that heavily relies on natural resource, and leave us in the same position that we're trying to get out of.
Because you know the history of Nigeria. this diversification story has been sold for quite some time, but it must be still quite a hard sell in a country that still gets the lion's share of its income from oil and petrodollars. This idea of going back to agriculture and low-level manufacturing. How receptive are the people to it?
The people are very enterprising here in Nigeria, and of course we have to work within the policy framework of the government. The government recently put up an economic recovery growth plan, and a key part of that plan is diversification of the economy. And there's been a focus heavily in terms of reducing dependence on imports. For instance, Nigeria used to import a lot of rice. And what has happened over the last 3 years is that there's been heavy investments in terms of getting self-reliance on rice. And I think we're beginning to see the results of that. Although the results might be mixed, but there's been a significant amount of progress along those lines in trying to achieve self-sufficiency in rice production. For instance, this is a country that has huge land resources available to itself. And one of the areas of this economic recovery growth plan, again, is to be able to provide those incentives and to create the right policies and enabling environment to ensure that this diversification occurs. But of course, these policies have to be sustained in the next 2 to 3 years for us to begin to see the desired results. But this new policies with the Economic Recovery Growth Plan has been widely accepted, and we're beginning to see the results of that implementation, especially with rice sufficiency.
Go back to Kigali again and Isaac and Nkusi. I mean, this situation that is facing a lot of countries in Africa. You don't have many land resources in Rwanda to say, but one thing that Rwanda could teach the rest of the continent is how to build an economy. The revival of the Rwandan economy in the last 20 years has been likened by some to the recovery of Germany after the war in 1945. What do you think Rwanda can teach the whole of the continent about building economies from scratch?
I think sometimes the best way to build an economy is from scratch, because you can get right down to the bedrock and start investing in what is meaningful in the current context, especially speaking about globalization. So I think that, again, Rwanda has been a very good example about what good governance can do to a very small landlocked nation that really doesn't have very much in terms of natural resources, which could be a blessing in disguise. So the fact that the country is heavily invested in agriculture, of course. We do have a mining sector that's vibrant, but by no means does the nation rely on the export dollars from the mining sector. I think that building strong systems, and of course, again, like my field as a financial literacy expert, educating the marketplace about the culture of building a sustainable economy based on human resource, based on good governance, based on transparency. Some of these things are extremely vital in inspiring Rwandans themselves to invest in our own country, but then also to market the country to the world as an investment destination where their money is well invested and safe for future use.
Okay, well, I have one last question for our man in Lagos. You've got elections coming early next year in Nigeria. Surely now is no better time to get the resources down to benefit the people. How likely we could see some election issues and also maybe changes post-election around this resource issue?
Well, anyway, the die is cast quite clearly, because the two major political parties, their candidates have emerged. And we look forward to a peaceful and a free and fair elections. By all accounts, both contenders are quite seasoned, and the issues that they're going to be raising are quite significant. There's a potential that the economy right now might be heading into a recession. There are major economic issues that need to be addressed. and of course a lot of political issues around restructuring of the nation and also restructuring of the economy itself. So there are a lot of issues around business issues and political issues and fundamental political issues around restructuring. So we look forward to the narrative of both candidates to be able to persuade the electorate. But quite clearly, it's game on. And I think it's anybody's game to win. And I think that the winner will depend on whoever is able to bring out the right narrative that is going to be able to address the underlying issues in the economy. And more importantly, that centers around lifting the Nigerian people out of poverty and to be able to provide the hope and the direction that we are able to utilize our resources to the ultimate benefits of our people. Because one of the major issues in Nigeria is we have a significant infrastructural deficit across social, in terms of health, education, and business infrastructure.
And that gentleman's afraid, but we'll have to leave it. Thank you very much both for your time.
Thanks, Chris. And that is all we have time for tonight. See you next time on Capital Connection at 6:30 p.m. Central African Time, every Monday and every Wednesday. Have a good evening.